Hello, everyone. Welcome to today's Daily Trader with Kevin Hincks. We got a good Tuesday lineup for you of trades to make. We're going to talk about Tesla. We're going to talk about UPS, both coming out with earnings. One beat up, one we'll discuss if we think it's beat up or not. But first, let's do our macro minute. I think that macro, though a light in terms of economic data this week, macro has kind of taken over some of the discussion here in the stock market. You've got the U.S. dollar climbing higher. Think about this. September 30th, the U.S. dollar was 100.75. Now it's over 104. How about the 10-year yield? On September 17th, it was 3.64. Now it touched 4.2 today, now sliding just below that 4.188. You've got gold higher. You've got crude oil spiking higher, and you've got the VIX higher. So all those key macroeconomic risk indicators are all flashing a little higher today. So as we get into this day, let's see how far that takes us. Does earnings, I think this earnings season is going to be defined by high bars and low bars to get over. You're seeing that in some of the names coming out with good numbers, but they've run so far that the stocks can't hold up at these levels. You saw it in American Express. You're seeing it in GE this morning. So there's a lot of reasons to watch out for expectations. We're going to talk about that on today's show a lot. Let's get to our first trade, and that is Tesla. Now, Tesla, as you know, they have earnings coming out Wednesday after the bell. And it's interesting. If you listen to the bears, they'll scream that Tesla is an auto company and it's trading way too expensive. And you can't value that company up at these levels based on those sales, even though Tesla delivered 460,000 cars in the third quarter. Pretty solid number, up from last year, up from last quarter. So they continue to improve. But the bulls, that's a different story, as you know, with Tesla. They look at cars. They have 4 cars currently and a Cybertruck. They have solar panels and the Powerwall and the Megapack. They have homes and supercharging stations. They have We Robot, the Robotaxi, the Robocab, the robotics. They have all these things, and they have Elon Musk, right? The leader, not to mention what he's doing with SpaceX and X and all the other things that he's doing, and Cyberlink and all these things that Elon Musk is involved in. So when you look at a name like Tesla, you have to decide, right? I can't decide for you. Is it an auto company or is it a technology company? Now, for this move on Wednesday after the bell, what we're going to play it is for movement. Movement versus lack of movement. And so the trade we have here for you is this. It's the long iron condor. It's the opposite of a range-bound strategy. We're looking for a move. If you look at Tesla on the trade tab, it's got a potential move of about $12, but for the week, it's got an expected move of about $14, and next week, it's got a move of about almost $19. So that's what we're looking at. We're looking at not this earnings week, but next week. Why? More duration. We're playing for a move. So we want to give ourselves more duration when we need a move. If you don't want to move, if you're maybe selling an iron condor, you want to go as short as possible. So what we did, we went out till next week, the November 1st expiration. Thought about that $20 move on either side. Traders like to round, so I like to round. We'll figure $20. I bought the 235, 240 call vertical. I bought the 205, 200 put vertical. So in the next 8-9 days, we're looking for a move of $20 in either direction. Right now, remember, we have till November 1st. We have 10 full trading days to get to that level. So that's the move we're looking at in Tesla, playing for the move versus no move. And we don't care which direction. This is profitable if it goes towards $200 or $240. So this is an option strategy that plays for a move out or at or outside the range. And the risk on this trade, we always talk about the risk. The risk is defined to the amount spent on the trade. In this case, it's trading right around $2.20 with the probability or the possibility to make $2.80, which is the difference between, what you paid and the $5 width of those strikes. So there's the trade in Tesla going out till November 1st, long iron condor playing for a move in either direction. All right, let's get to our second one, and that is UPS. Now, UPS, they come out with earnings Thursday before the bell. And so these are all trades you can do today or Wednesday and look at them. But again, this is a little different discussion topic because this stock, if you look at the chart, is beat up, right? And it just got downgraded by Barclays yesterday, a pretty significant downgrade. They lowered their price target to $120, lowered it from equal weight to underweight, and they think that competition from FedEx, competition from Amazon, and weak overall parcel demand is what's affecting this name. But here's what they're not looking at. Let's give a counter argument here. UPS is working hard on repositioning themselves to service small to medium businesses. They're specializing their logistics. They're clearing up the logistics chain. They're consolidating sorting locations. They're lowering expenses for their company. And they're also expanding into healthcare logistics. Remember, healthcare, delivery of healthcare is going to be a crucial part of the next 10 to 20 years. So they're positioning their company for the future. And what they're doing, they have a very healthy balance sheet and very healthy cash level on their books. So this is a healthy company going through a transition, and that's always tricky. So what did I do for their earnings play coming up here Thursday before the bell? And I did something a little more complex, a little more aggressive. It's two trades combined to make a complex trade. Number one, I went to the expected move, which is $7.40, which takes you to about $123 in that range. So I looked at the 125 put, and I sold the cash secured 125 put. Okay, there's the first part of this complex trade. It's a cash secured put. Then I used that credit to buy the 137 1 week, the November 1st, October 25th, 137 call calendar. Yes, this is a bullish play in UPS. And if you're not bullish in UPS, don't do this trade. Now, that whole package, everything we're talking about, the long call calendar and the short cash secured put, we're doing for about a 125 credit. It's softened there a little bit. It's trading about 110, 115 credit, but make sure, here's another little point on UPS. Use price discovery because their markets are a little wide. They move around a little bit. So make sure. I put this in about $1.25 credit. It looks like it's trading a little lower than that, but it's moving all over the board. So the cash secured put to finance the long call calendar. Why do I like that? Because if nothing happens and UPS doesn't get down to that 125 level, and you look on the chart, pretty busy level there in UPS around 126, 127. We're selling the 125 put in the short term and then doing the call calendar to the upside. That's in line with the expected move from 130 to 137. So a bullish play in UPS. Now, the risk, it's not really defined, is it? Because the cash secured put, this costs you a little more money in terms of the cash secured put because you have to have enough money in your account, enough margin to cover the trade all the way down to zero. Now you can make this a big boy short put vertical and cut into that margin. But for this case, all we did here was the short cash secured put to finance the long call calendar going into the earnings event. It's collecting theta, but like I said, it is risk. Below that 125, you have to assume that you're long the underlying, right? Below 125. But if you are, here's one interesting thing. Look at where this stock has settled many times. Where you would enter your entry of UPS long stock would be the 125 minus the whatever credit you took in. So you would buy UPS at 123.75 if you did this for a 125 credit. So there's the way to look at it. It's a little more complex. both of these trades can be done individually. Just make sure you understand the risk in a cash secured put. Bullish trade in UPS, an iron condor, long iron condor playing for a big move in either direction in Tesla. That's our show for today. Everyone have a great day. Good luck with your earnings plays and trading in general. This is Kevin Hincks for Daily Trader. Have a great day, everybody.